Hello, I'm Judith Panero, Executive Director for AAMC and AAMC Foundation. It is a pleasure to welcome you to today's virtual discussion. We hope that you, our community of colleagues, allies, and supporters around the globe are healthy and safe. Our offices are in New York, and today I'm speaking to you from Brooklyn, location situated upon the unceded seized territory of the Lenape and Canarsie peoples, and benefited from the economies of slavery and labors of African-descended captives. We owe our existence and vitality to generations from around the world who were brought here against their will, drawn here to escape persecution, and some that have lived on this land for more generations than can be counted. We pay respect to their communities past and present. This acknowledgement asks us each to consider the many legacies of violence, displacement, migration, and settlement that bring us together here today. The systemic violence and racism targeted at Black, Indigenous, and people of color is a harsh reminder of the inequities that persist in our society, particularly by the very institutions meant to protect them. AAMC condemns all violence, bias, aggression, and discrimination based on race, ethnicity, sexual orientation, gender, and religion. It is important to listen and learn together, and to also take action to make change a reality. AAMC's commitment to diversity, equity, inclusion, and access will continue to be a driving force of all our efforts. We call upon cultural organizations and the individuals working, funding, and serving them to take action to do better. We are dedicated to an environment in which all individuals are treated with respect and dignity at our programs. Each individual has the right to be in a professional atmosphere that prohibits discriminatory practices, including harassment. Our full code of conduct policy for this webinar and all our programs, as well as the outlets to make direct or anonymous report of violation, has been posted in the chat feature. For many years, we have been presenting virtual programming and documenting live events, all of which are accessible on our website at artcurators.org or our YouTube channel. We hope they provide actionable advice, value, and connectivity. You can also stay up to date on our programming by registering for our communications. We are grateful to all our attendees for making space in their schedule to join us. I also want to acknowledge our members here today and express our gratitude to them for their dedication in being part of our community. We give thanks to our speakers for sharing their experiences and knowledge in today's candid and open forum. Thank you again for joining us. And now to begin our program.
Good afternoon, everyone. I'm Anthony DiPietro, and happy to be presenting today to the AAMC. And I'm someone who spent a 20-plus year career in nonprofits, not necessarily in the museum field. I came from smaller nonprofits in the social justice and social service field, and now work at the Rose Art Museum outside Boston. And hopefully that makes me a good complement with my co-presenter. We're both, fun fact, we're both from the Boston area, but we've never met in person. So, but we've practiced this and hope to make it conversational and enlightening for you. So Natalie, would you like to introduce yourself?
Yes, thanks, Anthony. So I started my career actually in the for-profit sector in medical devices, and then moved to social services as well, higher education, and then for the last 4.5 years or so in museums. And so I'm Nathalie Apchin. I'm delighted to be here, and I think that everybody who works in an organization needs to have some understanding of the finances, because in the end, whether we like it or not, everything comes to money, whether we can afford to do the things we want to do. So we're hoping that you'll find today's interesting, and that it will help you reach your goals.
So if we could go to the first slide. So today's, just outlining today's learning objectives and how we've structured the presentation. We want to give the participants here an understanding of context of what's unique about nonprofit finance, and we'll give an overview of the common types of financial statements. Then we'll start to drill down into how the organizational budget works, and then specific types of budgets that feed into the organizational budget. So for example, an exhibition budget or a grant budget. Next slide, please. So what is unique about nonprofit finances? So a museum is also a business, as you know, and that needs to run with finances in balance. And all nonprofits in the United States are generally corporations. But what's different about them than what we think of as business corporations? Businesses usually have a profit motive. And nonprofits, it's not that they don't have a profit motive. They can earn a profit, which means bringing in more revenue than expenses over a period of time. But the profit must be reinvested in the organizational mission. So no individual accrues individual wealth directly from nonprofit operations. Yet the organization needs to be financially sustainable. There's no mission without a margin of profit, hence the idea of a double bottom line. This also, I like to say, sometimes the decision-making is very clear in a for-profit environment because of the profit motive. And in a nonprofit, sometimes it can be less clear because you may be doing activities that are more mission-focused, that lose money, and they have to be balanced somewhere else in the organization to make sure the organization is sustainable. The ownership structure is different with a nonprofit. So the assets owned by the nonprofit corporation are really being stewarded on behalf of the public and for public benefit. The board of a nonprofit represents the public's stake in that stewardship. We're also regulated differently and more transparently. Nonprofits over a certain very small dollar threshold must be audited, and our tax returns and corporate filings are public information. And fourth, we talk a lot about restricted versus unrestricted funds. So restricted funds are from donors or grant makers, and their restrictions can impact how and when we spend the money and when we account for it. This is especially important because during the pandemic, we've been hearing lots of questions about the mysteries of university and museum endowments, and we will get into that later in the presentation. And I think Nathalie will speak about restricted and unrestricted on the next slide.
So this is really the most unique to public charities and the most scrutinized aspect of our financials. This is where auditors make a lot of selections, and this is truly where we're at risk of not using the funds appropriately. And so, beyond being unique to public charities, what really is important is to pay attention to what the donors have imposed as restrictions. So there are three types of restrictions. The one that relates to the endowment is also called permanently restricted. So in that case, the donor restriction never expires. It's in perpetuity, it's forever. And the money that's given as endowment has to remain whole. The corpus has to remain whole, and that's the amount that the donor actually has given. So if a donor gives $100,000, that $100,000 needs to remain in the corpus of the endowment. The second category is temporarily restricted assets. So in that case, the donor's restriction is met at some point when either the restriction has been fulfilled or when a certain amount of time has expired. So an example is money that is given for a specific exhibition. So the money is held in custody until the exhibition is actually put together. And at that time, it becomes unrestricted. And so the third category is actually unrestricted. And it means that either there was no restriction in the first place or the restriction has been met. So this is really the most important concept in managing the funds of an organization. And so if we can go to the next slide, we'll talk a little more about the endowment because clearly this is for many organizations the most important asset. And there are a lot of misconceptions about endowments. So the first thing to understand is that an endowment is not a monolith. It's not, one wallet. It's actually the aggregation of many donor gifts. that are expected to last in perpetuity and largely are restricted. And so all these funds are kept by the organization and are invested. So they're meant to be invested. And they are listed in the statement of financial position. And we'll talk about what this is, which is a balance sheet, as invested assets. So the original gift, which we talked about as the corpus, the amount that the donor gave, has to remain intact. And the way it benefits the organization is that it is invested and it is yielding some interest income. That interest income can be accessed through a mechanism that's voted on by the board every year, which is the spending policy. So the spending policy is a specific percentage that the board has agreed can be accessed for operational support every year. For many organizations, it's about 5%. It fluctuates between 4.5% and 6.5%. And the reason of that percentage is that your endowment also has to keep its intergenerational value. So basically, it needs to grow with inflation. And so if you look at markets generating about 6.5% to 7% of value annually over a very long period of time, and you want to protect the interest, so if you want to protect the inflation value, then you cannot spend more than about 4.5% to 5%. And so that's what's behind this spending policy. It's, for many organizations, a very important and stable and predictable piece of their annual revenue. So the income appropriated, which is that percentage of your endowment that you can access for that particular year, is listed as revenue in the statement of activities, which is an income statement. And we'll go through that in a bit more detail. So if we can move to the next slide. We also wanted to give you a sense of who is accountable for the financial health of the organization. What is your role? What is your board's role? What is our role as CFOs? And so basically, we all are involved in the fiscal discipline of the organization. At the highest level are the board directors or trustees. They have the long-term sustainability of the organization as their responsibility. They are the fiduciaries of the organization. They have to put the organization's interest before their own. The leadership is the next level. So it's the director and all the C-level or VPs, executives, and their responsibility is to meet the organizational fiscal goals overall. When for the department, the directors, they have typically goals that are associated with their department, where they need to meet revenue and expenses goals. And for program managers, essentially their responsibility is to stay within budget. So depending on where you are in the organization, you may have these different levels of fiscal responsibility. So I'll pass it on to Anthony. Yeah.
Yeah, we were just, when we were putting this together, noting that, Nathalie's museum is much larger than mine, but the process for putting together a budget and of keeping accountable largely looks the same. We have a parent organization in my case, because we're a university art museum. So some of the parameters for our budget come from above, like the spending policy that Nathalie spoke about, and some come from other colleagues within the unit that we're responsible to self-manage our unit budget as the museum. So some of the parameters may include what we expect to fundraise in the course of a year. They also may include what exhibitions we'll put on, so that we have an idea how much we'll need to spend. And some of it is more in our control than others. But we both do it as a collaborative process with line managers who have budget responsibilities.
And so the budgets all come together, right? So within every level, departmental level, exhibitions and so on, they all get aggregated into an organizational budget. And we'll spend a bit of time later to look at these various budgets. But in the meantime, Anthony will actually talk to us about what the common financial statements and documents are in the next slide.
So these are the 5 most common statements that you'll hear about. The statement of financial position is also known as a balance sheet. The statement of activities is also known as an income statement, and the statement of cash flows. The first one I mentioned, the statement of financial position, is a picture in time. And again, we'll get into more of what each of these covers. The statement of activities is a picture over a time period. So usually it refers to a year or maybe a month or a part of a year. And you're looking at revenue and expenses in the time period. The statement of cash flows explains how and why the cash position changed over a given time period. And then all 3 of these are brought together in your audit, which is, you probably hear about often. It's a report that contains all 3 of those statements for a given year with notes and assurances from an independent auditor. And this is spoken about often because it's required for grant applications and government contracts. There's also the 990, which is a nonprofit tax return, and the 990T is a tax statement if the nonprofit has unrelated business income tax to report. So as I mentioned, the 990 is the tax return. It's publicly available. It contains elements of the reports above the first 3 listed here. And it also contains non-financial disclosures related to conflict of interest, board and governance policies, and often the salaries of highest paid staff are disclosed. The auditor usually prepares the 990 and 990T. And we're going to focus most closely on the first 2 listed here, the statement of financial position and statement of activities. These have the most relevant to the operations and programs of an organization. So if we could look at the next slide. We'll start with the balance sheet. This provides a snapshot of a financial situation on a certain date. It lists the assets, which is anything that the organization owns with an economic value, and the liabilities, which is obligations and debts, and net assets. Assets minus liabilities show you what the organization is worth. That's kind of one of the master equations in accounting. And the items are organized in order of decreasing liquidity or maturity. So when they are cash or will become cash. If we could look at the next slide. This is just sort of a visual representation of what I just explained. So an easy way to understand this is to think about not just a business has a balance sheet or has to be in balance, but if you think about your personal context of your personal life, what are your assets? Your assets would be a bank account, maybe your retirement account, a house or a car, things that have value. And those translate in a business context to your cash, investments, including the endowment, and property and equipment, buildings and land. And this has been listed on the slide again in the order of decreasing liquidity. I think we can go to the next slide.
So if we stay on this for just a second, So, beyond the assets, you have these kind of red circles, which is the liabilities. And often museums don't have a lot of liabilities. You have some payables, but museums typically don't like to have debt. But if they do, and sometimes they do, then that would be the liability. The same as in your own life, you may be carrying a mortgage, for example, or a car loan. So the equation becomes, your assets minus your liabilities become your net assets or net worth. So that's, the 3 elements that have to be in balance. Here we go. So that's a question that's coming in the Q&A, and I think this is actually an excellent question that we were wondering if somebody would ask it. So the question is, do artworks figure in the accounting of assets? And the answer is it does not. It does not, because it's actually not considered a financial asset with a financial economic value that can be disposed of. Really, artworks are in the public trust, right? The museum holds them for the public and is not at liberty to just sell them to generate income. And so, as you probably are aware, it doesn't mean that the museum cannot sell artwork. The museum can sell artwork through a deaccession process, but they have to use the proceeds to acquire artwork. And in principle, it cannot be used for other purposes. Now, during the pandemic, there has been a lot of conversations, and actually it started a bit before the pandemic, a lot of conversations about whether there could be some allowance made to this principle. And I think that there are very different views about that. Still, the predominant view remains that artworks can only be deaccessioned and sold to acquire other artworks. But there are some differences of opinion there. And if there are further questions later, I'm happy to come back to that question. But for now, I suggest that we move to the next statement, which is statement of activity, SOA, statement of activities, or income statement, or profit and loss. So these different terms all actually talk about, all refer to the same thing. So a statement of activities provides a view of the profitability over a period of time. Typically, we budget for a year, but we report on it on a monthly basis. Often, we also look at it on a quarterly basis. So there, the reference of time can be different depending on what we're looking at. But the point is that contrarily to a statement of financial position or balance sheet, which is the picture at a specific time, the statement of activities actually covers a period of time. So let's say a year. So during that year, the revenues show what we earn. So that's an income received from normal activities, whether it's earned. If the museum has paid admission, then that would be the revenue from admissions. It may be that there are services that are contracted for with the government, for example, and that might translate into earned revenue as well. This is more common for service organizations than for museum, but it could happen. There are gifts that are given from donors, foundations, that may or may not be restricted. And then, as we talked about earlier, there is the appropriation, the annual appropriation from the spending policy of the endowment. So these are revenues. And then expenses, well, typically expenses are either program costs or fundraising costs or management and general. And, we'll go into some more details about how we build budgets for these different aspects of programs or departments or exhibitions. So net income is the difference between the revenues and expenses. And so on the next slide is a picture of, and I know you can't read this, but I just wanted to share it because it is on the AAMD website. It's a picture of the aggregate of museums. So no one museum looks like this in terms of where their revenues are coming from. But in the aggregate, this is what the industry looks like. So in the aggregate, 20%, 22%, for example, of the revenue is from this income appropriated from endowment. And 6% is from federal government, and 2% is from state government, and so on. So if you're curious about how your museum differs or aligns with kind of the aggregate, that's a source of information that you can go to. But again, not one museum looks like this. It's just the aggregate of all of us as an industry. And some of us rely more on the endowment. That's the case for PEM, the Peabody Essex Museum, where I work. Some of us do get taxes benefits from their locality. Many of us get grants from the government. Some have shops that deliver some income or host, functions. Some of you travel exhibitions and, will get some income from these traveling exhibitions. So these revenue sources are diverse, and, there is also a case for museums that are part of another entity, often a university, where they might be getting some income from the university as well. So, many different profiles, but overall, this is how the industry looks like in terms of revenue. So if we look at the next slide, that would be the aggregate for expenses. So a bit of the same idea. In the aggregate, that's what we look like. But here, this can be used more as a benchmark, actually, because if we're very different in our revenue sources, we're actually much more similar in how we expend the funds. And so typically, about half of the costs are program related. And I expend program to the revenue generating activities of shop and so on, because basically a shop is also part of the experience that we want the visitor to go through. So about half, it's not uncommon that about half of the expenses are spent on programs. And typically we are infrastructure heavy. So we have big, beautiful buildings to host the collections. And so it's not unusual that the cost to maintain that infrastructure, to clean it, to repair it, to heat it, to cool it, is quite significant. And so 20% is not unusual. Cost of administration is often in the 15% range. And then I guess it depends on the profile of the museum, but for some museums that are, highly relying on fundraising, for example, they may have a larger fundraising team, or they may have expensive gala that they will need to maintain in order to generate the funding from fundraising that they need. So
we have a question in the Q&A that came up. Where do salaries fall?
Thank you. So salaries would fall actually in all of this, right? So the salary of people who are putting programs together would be under programs, and salary of administrators, IT, HR, management would be, so executive management might be in administration. The salaries of the people who clean the museum or who repair the museum would be in cost of infrastructure. So in this view, it's not, the nature of the cost is the function of the cost that is represented. All right, thank you. So let's go to the next slide. And actually, you preempted that question earlier, and so we'll just pass on to the next slide. But this is where, we thought that it may or may not come up that the collections, the artworks are not assets on the statement of financial positions. And by the same token, acquisitions are not reported in operations either. And they may not be budgeted. Some organizations do budget them and some don't, because they look at it as a very opportunistic activity, depending on what comes up. And also the funding for it might be already in acquisition funds in your endowment, or donors who are interested in a particular acquisition. So we look at it as a non-operating cost. And on the right side, this is just a quick view of what, how acquisitions are usually funded. And many of them come from donations, about 75% of them from donations, a few from bequests, and many of them, about 22% are purchased. And so that being said, Anthony, would you like to take us through
budgets?
The budgets?
Absolutely. So what on the acquisition page, I think we were going to talk about how acquisitions work in each museum. And in my case, we do go into the year most of our acquisition funds come from the endowment, so we do go into the year knowing how much we have to spend, and sort of curatorial makes decisions from there, not to exceed that amount. We can go to the next slide.
And by the same token, at PEM, we don't have a lot of endowment associated with acquisitions, and so it is a more opportunistic approach where, if we find something that really is interesting to the museum, then we'll go after funding, we'll go after donors in order to make it happen. But we don't necessarily, we certainly don't have a consistent budget year after year. It's much more based on the opportunities that come up during the year.
Thanks. So we can go to the next slide. And sorry, I was rushing ahead, but we have there, I think back one. Yeah, we have there, generally the definition of a budget that we're talking about is the plan for getting and spending money to reach specific goals by a certain time. Usually we're talking about a one-year budget. So we said here at least an annual basis, we're projecting revenue and expenses for that time period. With the pandemic, there's been a lot more uncertainty, which we'll talk more about. So often the budget is for a shorter time period. But usually 12 months are approved in advance of going into that budget year by the board. The budget demonstrates that to outside funders that you have a capacity for financial management. So any and every funder usually asks for it. And the format of the budget matches the statement of financial activities, or the income statement or the profit and loss, so that it can be compared month to month and at the end of the year to assess financial performance. Next slide, please. So the characteristics of a good budget. Budgets should be well thought out, and a well thought out idea of future actions, including both the income and expenses. As I mentioned earlier, fundraising, a trap that a lot of the small nonprofits I've worked for have fallen into is we need to spend, 1.5 million this year, but we think we only have 1.2. So we'll just throw the rest into the fundraising team. But you can't do that if you haven't thought out an actual plan for how you would raise the extra money. So budgets should be thought out also in the context of the mission and the strategic plan. They should be based on past experience, current information, and your assumptions about the future based on the best information you have available. They should take into account resource generation and allocation, and they're to be adhered to, but also modifiable when necessary. So we've talked a lot about, Natalie and I, when we prepared for today, about the flexibility that's required with budgeting. As I said, the pandemic has really greatly influenced how museums revisit their budgets more often now. Many are doing rolling forecasts. I know I'm doing one a month, and sometimes doing budget modifications for shorter time periods than a full year. And we do a monthly projection, but we are only required to submit it to our parent university 2 or 3 times a year in a typical year. It's more often now.
Yeah,
So,
and at PEM, we do an annual budget, which is approved by the board, and then at mid-year, we do what we call a reforecast, which is essentially, based on having 6 months more of information, we adapt to the circumstances, the current circumstances, and we give a projection for year end. And during this pandemic, we've also looked at it much more frequently, more formally on a quarterly basis, but we would really monitor it on a monthly basis because what's happening with the budget, clearly is what's happening with the cash. And in the end, what really matters is, do we have the cash to operate? And so really important to follow what's happening and not just think that once the budget is set, it is fixed. It is fixed to some extent, but it needs to accommodate the changes in circumstances.
and the next slide is yours, Natalie.
Yes, thank you. So why is it important? So we just talked about, it's important because we need to monitor cash, but it's also an opportunity to internally align the organization around goals and the work to be done. So it's generating all these conversations about what do we want to do and how do we do it. It's identifying the resources that are needed to make these goals a reality. It does force discipline. Once you have a timetable and deadlines, you actually get the work done. And it's also engaging, many stakeholders and bringing accountability to bear. It also is actually a really good tool to distribute the decision-making in the organization and build resiliency, because we do have to make sure that we obtain the resources that we need and that we spend them wisely and according to the goals. Externally, it's also very important because most funders require to see budgets as a condition to giving us money. Certainly the banks do for a loan or a line of credit, and also the auditors. So as part of internal controls, when they review the books, they don't just review the past year, they review it in the context of what had been set as goals. And that is part of the assessment of good governance for the organization. The other thing that's important to understand is what happens when there is no budget. So if an organization, and there were some movements many years ago, maybe it still is the case, of companies that say, well, who cares about budget? We're just going to operate and we're not going to make budgets. But we can't really do that. If we overspend, we have the risk of cash crunch or deficits that will jeopardize the future of the museum. If we underspend, sometimes we actually have to return the money because, again, the money is given to us under certain conditions that we will do certain things. And if we don't do these things and spend that money according to these donor wishes, then we may have to return the funds to the donors. Or it may be that we don't spend, if we don't have the budgets and the clarity, we could be spending funds in different ways than the gift terms. And in that case, this is clearly an unallowable way of using the money that could yield to audit issues and even more serious consequences for the decision makers if the money is not appropriated according to the terms. So let's talk about the different kind of budgets that may be prepared, and I'll pass it to Anthony.
Sure. And so we're not, our project isn't to teach how to do this in the short time that we have remaining, but to acknowledge that as a curator, you may prepare different kinds of budgets, and we'll give some tips and some information about that. So maybe prepare a departmental budget for just your department's annual expenses. Exhibitions budgets may be more complex because there are revenue and expenses, and they may be multi-year. They may not fit neatly within 1 year's budget. And grant budgets may be complex as well. These are all project budgets, which I'm using as an umbrella term for a one-time event or a time-limited event. And project budgets are useful for something that doesn't align with the fiscal year and is going to be segregated in some way in the organizational accounting. So projects also may combine transactions that would show up on the statement of financial position or the statement of activities. But ultimately, we think these are the two most useful kinds, the last two here, the exhibition and grant budgets for this particular audience. So we can go to the next slide. How are budgets organized? They basically match the logic of the statement of activities. So they start with revenue sources, which may be earned sources such as program revenue or admissions, and they may and then restricted gifts or unrestricted gifts would be next. And then the expenses are also, they follow a typical form, which starts with payroll costs, the people costs. Usually in nonprofits, that can be anywhere from 50 to 75% of all expenses, and it can be a large portion of a exhibition or a grant expense, depending whether they're intended to be shown there. Usually the next line has to do with consultants and contracts, which are essentially services, business services, and those are often large in a museum context as well, because if you think about the costs of art shipping and storage and conservation, those can add up. And then you would go into other operating costs such as supplies, marketing, advertising, travel, utilities, insurance, legal. That, as Nathalie spoke earlier about, that some museums may have debt, and your current portion of debt would be shown, which would be like the interest portion of your mortgage payment, but not your whole mortgage payment, would be shown on an income statement based budget. So the line items, this goes to the question about salaries as well, are named in a way, you know, all the things on this slide are named in a way that they're the nature of a regular cost of doing business. But not all budgets include all types of expenses. So we'll take a look at the different kinds, as I said earlier. We can go to the next slide. For a department budget, you may only be concerned about projecting the salaries, although sometimes that is done by an HR or a finance department. Your department's travel, your department's supplies, guest curators or artists that you engage. You may or may not have revenue responsibilities. You know, if you're budgeting, say, for programs, you would probably have income as well as expenses. The development department, of course, would also budget for philanthropic revenue. And your colleagues in other departments would be developing their own budgets simultaneously. So these roll up into an organizational budget, and you can envision the expense line items like travel, payroll, supplies as line items, and the department budgets you can envision as columns. So they all add up to the whole museum budget. But we also have to think about exhibition budgets. So we can go to the next slide. The simplest form of doing a budget, if you are doing a department or an exhibition budget, is just, it's a list of mostly expenses. And again, revenue may or may not apply. So we found kind of the most basic one that we could find online to show the list of the types of expenses that you may need to list. We can go to the next slide.
And so, you know, departmental budgets are kind of the simplest form of doing a budget. And the next level of complexity really lies with the exhibition budgets. Exhibition budgets will show both sources of funds as well as uses of funds. And they will include all the costs that are necessary to incur to put on an exhibition. So, for example, you know, you would have registration costs and exhibition design and exhibition materials and publications, but there are some unique elements to specific exhibitions, and it's not as standard and simple as a departmental budget. Also, because it will span typically several years. It can take 2, 3, 4, 5 years to put up an exhibition, depending on the scale of the exhibition. And so there is a level of translation between what it's going to take to put this exhibition together and also when these expenses are going to be incurred. It depends on the museum whether they will include some costs which are maybe a little harder to trace to a specific exhibition. So, for example, some museums consider that educational expenses will be part of the overall budget, but not necessarily track to a specific exhibition, when others will. And same with marketing or opening costs. So at PEM, for example, we did not track to a specific exhibition the advertising. We just had an advertising budget overall. And then, you know, we would allocate it during the year to either museum general awareness or specific exhibitions, but we would not tag it to exhibitions. And we just changed that. So now we are actually tagging that advertising to a specific exhibition because we want to have a better sense of the total cost of putting together an exhibition. And same with the opening costs. We used to think of opening costs as general development costs. So cultivating patrons, bringing them to an opening was more thought about as a development cost. And now we're looking at it more as a specific exhibition cost. So there is no right or wrong way of doing it. I think it depends on how the museum is thinking about it, and also what the funding sources might be. So if you have a funding source that's specifically targeted toward exhibitions, you may want to be very clear about what all the costs are that go into this exhibition, including the advertising and the opening event costs. Also, some salaries may or may not be included. We don't necessarily include the salaries of curators, for example, because these are ongoing, and curators, we're not asking them to do time tracking the way a law firm would do time tracking, for example. So we're not asking curators to tag their time to what specifically they are working on. So we know that we're not capturing every exhibition cost, right? Because of course there is time that goes from curators that goes into exhibition, but we're looking at it more as, the curator's salary is captured in the departmental cost and not tagged to a specific budget exhibition budget cost. And so many people clearly are involved, and we have all these people work on exhibition budgets at PEM twice a year, refresh it twice a year, make sure that they capture all the costs that are incurred linked to that particular exhibition across all the years that the exhibition is being considered through its delivery, and maybe past delivery if it's traveling. And then in finance, we do the compilation of these particular exhibition budgets and the departmental budgets, so that we get to an overall organizational budget. So Anthony.
The way that that's done in any organization is may differ, but there's some sort of account code that would be used for a specific exhibition or project. And for example, we weren't doing that at the Rose before I arrived, but we've started doing that because we think that it's a better financial management and planning tool, and accountability. It creates accountability. And speaking about like the people involved, similar to you, like we wouldn't put curator salaries as an exhibition budget, but if there was a guest curator for a particular show, that would go there. And also we do put our installers. We're small enough that we can divide up the installer's time based on what they actually worked on and make that part of the exhibition costs and plan for that as well.
Yeah, so if we look at the next slide, you'll see that the lines are a little bit different than what we were looking at on the departmental budget. On the revenue, so that's an example of an exhibition budget that is just looking at one particular year and looking at the revenue associated with this budget. Gifts that are coming in, maybe foundation grant, there may be a publication that's bringing revenue. And then the expenses are not necessarily the same lines as we were looking at before in terms of personnel and travel and so on, but we first look at them more as a departmental cost. So the registration department will include all the costs that are incurred, and then they will have an additional layer of detail that might be looking at what are the loan fees, or what are the freight or crating and packing and courier's fees. So there is a whole layer behind this level of aggregation that we're looking at here.
We can go to the next slide. I just want to say that we're at risk of running low on time for Q&A. So if anybody does have burning questions, feel free to put them in the Q&A and we'll try to work them right into our presentation. But we wanted to say a word on grant budgets because these are, this may be required in the course of doing business or in the course of being a curator. So usually if you're applying for a specific grant, whether it's large or small, often the funder will provide a budget format, but it's good to have a standard format in-house. And this would follow the statement of activities order, as I said, of revenue and then expenses. We listed the federal grant categories here, which again follow roughly that same order. Indirect cost recovery is sometimes part of a grant budget. So that may be a percentage of all expenses that would be pre-negotiated with the federal government and good for a period of several years. It helps you recover the cost of facilities and administrative support. And when you're preparing a budget, you're going to take estimates from your best judgment and from your past experience. So you may know how many, a registrar may know how many trips it's going to take to move X number of pieces of artwork to make a show happen, let's say, or a project happen. Usually when we've developed a format in-house, we format it in such a way that we can track the actuals. So the budget may be in one column, and next to that, the actuals, so that later we can track the result. And the best way to do this is to start to get friendly with Excel. I'm a very linear thinker, so I've always been friendly with Excel. If we could go to the next slide, we'll show, this is a sample of what a grant budget may look like. And this is a little bit more complex because often you have to provide, see how there's a justification column, and there's actually several columns that you would use before you would get to the total cost in your budget, because often you have to show the funder how you came up with the rationale for how you came up with that total cost. So it may be dollars times hourly rate, or it may be number of units times the cost of units. If it was supplies for a program, it may be, how many binders do we need times whatever the cost of one binder is, and you show the work to the funder. Yeah, these are often required for grant budgets. And I think Nathalie wanted to talk about the consequences of, a budget variance in a grant.
Yeah, because often when you submit this type of budget to your funder, and particularly to the federal government, not only you can't exceed your overall budget, but you can't exceed by more than a certain margin the line by line budget. And so there is a lot more scrutiny, a lot of more rigor that is necessary for a grant budget, a federal grant budget in particular. There are also additional rules. So for example, the government might decide that you cannot accept a bid if you don't have 3 bidders on it. And so you have to follow these governmental rules to make sure that you get the best cost estimate overall for this project that you're putting forward, and that basically you're asking them to pay for. So a lot of specialty knowledge required to do federal grants, and a lot of relationship work that needs to happen also between the person who's putting forward the budget and the foundation or corporation sometimes that is looking at the grant. And so we'd like to conclude with how budgets get approved. And so basically, typically you have all these budgets that are developed by you and your colleagues, your departmental budgets, exhibition budgets, and grant budgets that are being rolled up, aggregated, and that feed into an organizational budget. So the leadership team reviews the aggregate budget, and what happens almost all the time is that there is more that we want to do than we can afford. And so very often we actually have to go through iterations of the budget and really align the expenses that we want to incur in order to pursue our goals with the funding that we can reasonably expect. And so we need to bring a budget that's in balance, where revenues can cover expenses. And then typically we will bring it to the finance committee of the board, who will review it and discuss it in detail. And then they will recommend it to the full board, who will have some access to it, but won't necessarily spend as much time reviewing it. So they will rely on their colleagues at the finance committee level, typically to make sure that all the details are worked out, and they will look at it in the aggregate and approve it in the aggregates. And so that's the final step, the board approval of the annual budget. And we have some additional resources that we wanted to share with you that we can leave on the screen and see if you have questions that we haven't had a chance to address that we'd be happy to talk about.
I think, Nathalie, you recommended this Harvard video, which explains in more detail about what an endowment is and how it works, as well as these first two resources are where some of those slides came from that show what museums look like in aggregate. And then the last two resources are, I'm a geek, so I like to read nonprofit financials for fun. So that's where you go to do that in the last two bullets.
Yeah, and I can't say enough about this video on the endowment, because I find that this is where the most misconceptions are. I think it's really important to understand what are the restrictions around endowments and how they are meant to function, and they're really meant to be there forever so that the museum can last forever. And so we can't raid the endowment, and that's a very topical discussion actually during the pandemic, where there were some thoughts about can we go deeper in the endowment to sustain us during this period of crisis, or do we need to take some more radical measures? And so understanding the role of the endowment, the limitations of the endowment, is really, really important if your museum has an endowment, and you have the chance, because it's actually a great asset to be able to rely year after year on the spending policy that will bring some annual income to your museum.
Looks like we have no questions. So just thank you for your attention, and thank you, Nathalie, for being a great co-presenter. This was great.
Anthony, it was a pleasure, and thank you, all of you, for attending. Of course, Anthony and I think that finances are fascinating, but we understand that that's not everybody's conception. Here we have a question. So how would you advise curators to advocate for greater financial transparency at our institutions? Well, you may want to talk to your CFO, actually. I think that that may be a good start. Of course, your director, but also your CFO, because I think it's very likely that your CFO is an ally in promoting transparency. We at PAM have started to do brown bag sessions where we talked about generally, how nonprofit financials work, but then specifically how we build budgets for PAM and where everybody sits in the PAM budget. And so we've also started to do periodic reporting on actual versus budget. We try to take advantage of all staff meetings to do that. So we have things kind of more institutionalized, but we also have things that are in smaller committees with people who are interested to learn more about nonprofit budgets. But I think, going to your controller, your CFO, and showing interest is likely to result in them actually being very willing to share. There is also public documentation. So the 990 is public. You can get a copy of the audited financial statements, and by looking at it and asking questions might be another avenue. Anthony, you have other ideas?
Well, I agree with you. I think that hopefully the CFO or finance department welcomes that. I know it takes more time, but I would rather have line managers and people who have any responsibility for budget know what they're doing and understand how it all fits into a bigger picture than not. So yeah, I agree with you that that asking about it and advocating for it is important. I think we may have gotten all the questions.
Yeah, hopefully we didn't put anybody to sleep.
Okay. Well, thank you. So we can hand it back to Monica and Judith at AAMC.
And how do we do that?
Hello, I'm Monica Valenzuela, Program Manager for AAMC and AAMC Foundation. Thank you for joining our program today, and a special thanks to our speakers for sharing their experience and expertise with us. A recording will be available on our website, artcurators.org, and our YouTube channel shortly. Please help support our capacity to continue programs such as today's event by making a donation today. A gift of any amount will have a direct impact on our work. Thank you, stay well, and join us again soon.